let me tell you a little bit about Symvan Capital. Symvan Capital, I'll first show you a little risk warning here. Symvan Capital has been around since, we're about 9 years old now. We started off with an SEIS company, and a fund, shall I say, and we have an EIS fund, and one of each open at any given time. And what I'm going to tell you a little bit about today is about who we are, what we do for you, get into fees and performance, and why this might be a compelling investment idea. It should be borne in mind that the tax year is less than a month away, and we still have investments that will be made before the end of the month. You can come into a spread of 10 to 12 companies, and that'll allow you to utilize what they call carryback. Now, our target return, when we first came into the market, it was just driven by the generous tax breaks, which are 30% for EIS and 50% for SEIS. And most people had a target of £1.10, £1.15 per £1 invested. And we thought, we should look at this as it's a high-risk area of venture capital, but it's also capable of some excellent returns. It should be the most exciting part of your portfolio. And we came right from the beginning, and we're talking about a 2.85 return per £1 invested in an average life of 7 years. And that should give an IRR of about 22%. So once again, there's about 60 fund managers in the EIS space, and there's a group called Apex Allenbridge, probably some of you have heard of, who they're the oldest in terms of rating managers, and sort of like Moody's rating debts. This is what Apex Allenbridge, and there's a few others like MyCap and Hardman, etc. But as you can see here, we're in the top 10. Now, when we first started off, I think we were at the very bottom of the pile some years ago. So I think we recently had a product score of 88, and the highest score is 92 of these 10. So we're closer to the top rather than the bottom of this. In other words, I think we're, dare I say it, part of the EIS establishment at this point. So what do we invest in? It's probably easy to talk about what we don't invest in. So we don't invest in life sciences from the bottom up here, consumer tech, university spin-outs. Our real sweet spot is enterprise SaaS. So we look for enterprise software that has the advantage of low capex and recurring income, and they're often large, sticky contracts. So we invest in a lot of things like fintech, blockchain, insurtech, etc. So right from the get-go, and this incorporates our philosophy of investing often at SEIS stage first, and then in multi-tranches, sometimes through years before we exit our companies. And this is what we call our life cycle approach. Now, this has two advantages. One, if you get in at an early stage, you can exert your preemption rights and follow the company on the upward trajectory at all the way through. So, for instance, if you were lucky enough to get into Revolut, which was an SEIS and EIS company in 2015, you could have followed in and followed that up to an exceptional return. So, the known knowns, you might remember this band from some time ago. The known knowns are the tax, right? So, if you put £100, I'm going to compare EIS and VCT here. Both of them you get 30% back, but as you can see in the yellow, there's something called loss relief. So if a company fails, an EIS company, and venture capital is about failure as well as it is about success, you wouldn't get this in a large cap portfolio where there's failures, but there is in venture, and you get roughly another 30% back in loss relief. But you can also, business relief refers to IHT, you can also have this outside of your estate so that you can more tax effectively pass wealth down the generations. And finally, for those of you with the capital gains, you can defer it, which you cannot with an SEIS. So let's talk about choosing an EIS manager. Most people in the market charge 10% in fees, roughly taken off the top, some a little bit more, which means has two disadvantages to the Symvan approach. One, you get tax relief on 90 instead of £100, and two, it's like being in a race and you're starting 10 yards behind. You've got to have better, if you're one of these people who charge investors, you have to have much better performance than Symvan just to equal the return for the investor. Symvan doesn't charge any fees, and this is one of the questions on the questions that you walk around the booths, and a lot of people have come up to us. We don't charge investors any fees upfront or ongoing, and we just charge a performance fee, and instead we charge the companies. Now, this is a little graph very quickly. If you can see 2% per fees to investors per year on a 6% annual return over 30 years, look at that bottom right-hand corner. It takes 49.5%. So we call fees in fund management the carbon monoxide of the fund management industry. Seemingly innocuous low fees really impact on your return. Now, tech has been in a bear market for about 2 years, a little over 2 years, and this is actually a very good time to buy. There are a lot of people who bought when the market was too frothy and probably have some down rounds if you're a company or losses if you're an investor. But these times, if you look at anyone who remembers the 2008, 2009, if you hadn't invested after that, you got access to stocks like Uber, Slack, Square, and Instagram. And if you're in the UK in 2015, which it's hard to believe now that it's still that young, Revolut, which recently was raised money at a 33 billion valuation. Okay, so the secret to EIS investing, it's all about exits at the end of the day, and it is about VCTs as well. Now, we have had a few exits, and then they dried up. We had 2 exits before the onset of COVID, and then it dried up for 2 years. And then last year we had 3. One which was a failure, one which was a 2X, and one which you basically got your money back. But we've got all of these companies here have been talking about, have had people approach them on numerous occasions. The company down in the bottom right is called Wright+Dem. You might, for those of you who are investors in Aviva, you might know Amanda Blanc, who's the CEO there and has done a great job. She was formerly the chairman of Wright+Dem. So we have some really high-class management talent. Let me just tell you briefly, because these companies, not all of them, not Sweetbridge, because we're in the process of selling that, but the other ones you can still get access to if you invest in the next before the end of March, should I say. So RUVR is basically a company that uses AR and VR to help enterprises educate their workforce. As we know, all businesses constantly have re-education. If you're in financial services, for instance, you have to do a compliance module once a year. Custodiax is a very interesting company from Manchester, and it basically provides custody services or technology for custodians to store digital assets. Now, a few years ago, and when I say digital assets, most of you know that as Bitcoin and Ether, etc. But digital assets, there's something underway, some of you may be familiar, called tokenization. And there's many learned sources who predict that tokenization will radically transform. It already is the money market funds. I see Aberdeen up here. They have a money market fund that's tokens. In Texas last year, at a show called Consensus, it was a massive launch for Franklin Templeton, who are one of the biggest asset managers in the United States. They have moved towards tokenization, and you're going to see this with property, you're going to see this with bonds, etc. Now, what has stopped that happening so far, and tokenization is one of the great financial innovations because it really will reduce costs and it'll allow you to transact 24/7. And so for those of you familiar with settlement, T+3, T+1, this will be T instantly, T plus nothing, if you like. But Custodiax is the only solution globally that can provide the real sweet spot, which is that it's cold storage, meaning it's offline and not hackable, but you can transact at speed in volume. No one has been managed to crack this, and a lot of people are trying. Some of you may be aware of a UK company called Copper, which Barclays invested 500 million, or they led around to 500 million about 2 years ago, at a valuation of 2.5 billion. Guess what their revenues were at the time? Less than 10 million. So that's just an off-the-charts value multiple. And that shows that because someone's going to really win in this space, and we think it's our guys. Cognisys down at the end is, at the bottom, is a company that basically uses gamification, and through their AI allows enterprises to evaluate candidates. Wright+Dem, as I mentioned, automates claims, essentially gets rid of call centers is a very simplistic way to put it. But if you use AA for your car servicing, you go through Wright+Dem. And they're just about to sign a few large contracts. Now, as I say, all of these companies have had people approach them, some of them quite high-profile companies that you would be aware. One thing that's important to know is that most M&A in tech, both in the United States and in Europe is under $100 million. So all of these companies that we all know and love, they make lots of purchases, 10 million here, 50 million there. Let me just show you an example of the spread. Actually, I don't have that slide here, but there's a spread of about 12 or 13 companies that you would get access to if you invest in before the end of the month, as I've already mentioned. Now, the advantage to that is that if you had a capital gain going back 3 years, you can defer that. Or if you have income tax from last year, and this is what they call carryback, you can get relief on that. So essentially, the real reason why you invest in someone like Symvan is because we're one of the top rated funds in the EIS space, and it's really effective at tax planning. I think anybody who's paying substantial capital gains or income tax in this country should definitely consider investing in EIS. And where you should really spend your time is looking to assess a manager.